Hi, Dr. Patrick Gentempo here, and thank you for joining us on our YouTube channel. We have great content in store for you. I'm so excited to be here with you, and let's jump right into it. Greetings. Welcome to Crisis Investing 2020. Excited to have the conversation we're about to have with Greg Guenthner. Everybody's got their own context or point of view here as to what's going on. We are in the heat of it, so we know that this whole situation is fluid. I mean, the markets are changing day by day. The advice we're getting is day by day. The news headlines are changing day by day. So we're here April 2nd right now, just to timestamp it so that you can understand the reference point for when we're having this conversation. So let me just start out by saying, Greg, thanks so much for taking some time and talking to us.
Yeah, thanks for speaking with me.
So can you maybe just start out, Greg, tell us about your background. Basically, how did you get to be doing what you're doing today?
I have been an investor and a trader for close to 15 years professionally now. I'm a chartered market technician. I deal mostly with shorter term stock trades. I'm a chart guy. So that's where I'll be coming from today when I speak about the markets, not necessarily from a larger macroeconomic perspective.
So is all this market volatility your friend?
Not necessarily. I mean, a lot of the very short-term traders, day traders tend to say that they like volatility, but this is an unprecedented market that we're in right now. I think for 99% of the people that are trying to trade it, they're having a difficult go at it. The old saying that the market hates uncertainty is certainly true, and that's where we are right now. Even bad data would be a good thing right now for the stock market because we don't know how long this situation is going to last. We don't know how long we're going to be indoors. We don't know how long the economy is going to be frozen like this. And all those unknowns are what the market is trying to tackle right now. And because we don't have any of these answers, any little bit of news either way is just sending stocks either way higher or way lower in a matter of minutes. So it is a very difficult trade environment.
You used the term unprecedented, which is a common term I'm hearing now, and you've been around long enough to see other things happen like 2008. How is this different?
This is different just because it's faster. The market had to almost immediately recalibrate to a new normal. If you look back at the financial crisis, you'll note that the stock market actually topped out toward the end of 2007. We were already well into a bear market by the time we got the Bear Stearns bankruptcy. Lehman Brothers, all that stuff that sort of sent us waterfalling lower into that huge tailspin in late 2008. So if you were trading from a tactical position right then, you would have already been short or leaning short on the market. And then you watched that unfold over a period of months until we got the big whoosh lower in the fall, and then once again in early 2009 before we bottomed out. But this happened almost instantaneously. We went from what were essentially all-time highs and markets breaking out across the world to one of the biggest routes that I've ever witnessed.
Yeah, it was kind of startling how quickly things happened. And, I know nobody can predict exactly, what's going to happen or when it's going to happen. Do you have any sense, at least right now, do you think we're near a bottom, or it could go a lot lower, or maybe there's a probability of it going lower? Do you have a sense about any of that or not really?
I think right now we need to adjust to a bear market mentality. I do not think that the bottom is necessarily in. I think we've seen a bottom, not the bottom. I think that what we've seen over the past couple of weeks has been what we call a relief rally. There are plenty of people looking to sell or get out of positions here and higher up, and I think we're going to have to shift to that sort of selling mentality going forward. Also, I think that when you see periods like this where we are first entering a bear market, you're going to see a lot of whipsaws in both directions. There's going to be a lot of people who have been, I don't want to say brainwashed, but they've gotten used to the idea that the markets will recover quickly, and they will be more than willing to hop on and try to ride kind of a V bottom back toward new highs. And I don't think we're going to see that this time. I think that there's going to be a lot of pain both ways when it comes to people entering new long positions and trying to ride a new march higher, and people entering short positions late and getting run over by big, huge rips to the upside as well. So this is the kind of market where if you're not careful, you can lose both ways.
You said a bear market mentality, and I think some of the things you said probably are part and parcel to that. But But can you just describe what you mean by bear market mentality?
Well, I think it's the type of mentality where you have to go from assuming that you can buy dips, and instead you get, like they say, sell the rips. You can't assume anything. You can't assume that bad news is priced in. You can't assume that this is as low as the stock is going to go. That's what a lot of people tend to do. This can't possibly go any lower. Well, unfortunately, that's not the case. The stock can fall much farther than the bottom of your chart. There's always zero, even lower down, and especially when it comes to riskier assets as well. So, not necessarily the time to be thinking about getting things cheap. Unless you have a very, very long-term time horizon in mind.
Yeah, it's really interesting. And so your frame of reference, you're not really looking at company fundamentals or the fundamentals of the market before this whole collapse and so on. You're basically charting and looking at technical analysis. Is that correct?
That's correct.
And in doing so, you're basically trying to anticipate what kind of moves there would be based on how things are charting. So are you charting mostly indexes, individual stocks, or both?
Yes, both. And you said fundamentals. Well, I mean, if you're looking at fundamentals right now, I'm afraid that you're going to have a tough time, because I guarantee you that there's going to be a ton of earnings estimates getting restated, and everything's in flux. So, I mean, I don't really know how you're going to make some sort of fundamental argument, when you have all these moving parts and all these unknowns looking forward. We don't know the full extent of the government response yet, and we don't know the companies that are going to get bailed out and to the extent they're going to get bailed out. So there's a lot of unknowns out there right now that are going to impact fundamentals 3, 6, 9 months down the road. So I think a lot of that analysis is on pause until we can get a clearer picture on where we're headed.
Thanks so much for being here and watching that video. And can I ask you to please subscribe to our channel so you can find out when we're posting new content. You'll be alerted right away when we do. To share this with people you think might benefit from the information, and certainly it helps us if you like the video. So if you like what you just saw, go ahead and hit that like button. And again, thank you so much for being here with me right now.